And welcome back for part two to talk more about pricing strategy for professional service firms. Let's jump back in. Lynn here asks, can you comment on price per participant pricing on training/education, for example, as being the basis of fees from the provider? So establishing a minimum level of registrants slash cost to run and then a per participant after. Any advantages or perils in this? Good question.
No, I love it. I love the idea that there's a fixed cost and then there's a per participant cost. You've got to decide from a model perspective. Do you say the fixed cost is this and every individual person after that? Every individual person, there's a per fee person, like a customization cost and then a delivery cost, if you will. Or whether you say, aha, for 18 people, if I'm running a training, this is the cost. If you're going to put 19, 20, 21, here's the marginal cost per person. I think both are very, very doable. I think it's just a question of you modeling. Like get that old spreadsheet out and model and say, okay, let's just see what works. I also think what's easiest for you to manage and also what's best from the client's perspective. So, for example, the client may say, you know what, the whole idea of having, if I've got approval for a certain amount of money, I can't go back and get approval for a couple dollars more because I want to add one or two people. Okay, so sometimes what you might want to do is you might want to say, okay, so the price for that particular training is X dollars. Let's say they've got 19 people, and you could say that's for up to 22, right? And so there's a little bit of extra buffer that they can actually, put in, if you will, and not feel bad about doing that. But they know after a certain amount, it'll be easier for them to go in and request for more money, right? It really depends on who you're dealing with. Some smaller businesses where you're dealing with a principal, it becomes a little bit easier to have the conversation. What's easiest for them? Okay. Last thing you want to have happen is fine. Decide on a per participant charge, and then what you thought was a 20-person event turning out to be a 3-person event, and you lose your shirt. A huge amount of preparation, research, preparation, rehearsal, and then all this, and your time on site. And then abracadabra, you're only billing for X number of people. Wow. So
can you comment on subcontracting and prices of subcontracting? So if, another associate does it, is there a standard industry amount in consulting, for example, that you think is across the board? I mean, it's so hard to know what other consultants are doing. So any insight, welcome.
I wish I could say, here's what the stats say. Okay, I don't have that. So I'll offer something else, which hopefully it helps. Number one is how would you want to be treated if you were subcontracting for them, right? What would you expect, right? Because it becomes a lot easier for you to say, okay, so I guess if I expect that, then number one. Number two is how much training will you have to do with the person who you're subcontracting it to, right? For them, all of a sudden they don't have to do the business development. The work just lands on their lap, but you can't expect them to deliver on your content, on your everything, unless you actually spend some training. Now, sometimes you'll bring somebody else to train on something that's not your expertise, in which case that, consideration really isn't on the table. I think it also depends on how much work you're going to guarantee them for the year. Okay, or how much do you expect? How much do they expect? If they expect an awful lot of work, okay, it's different than if it's a one-time only. If it's a one-time only, they've got to make a lot bigger investment that they can't amortize over a long period of time. They've got to, figure out your systems and your way of working and all that kind of stuff. So, if you've got somebody who's almost full time doing this every day or every week for you, it's a different story than if there's somebody that just bring in once or twice. The other part is what's the possibility for them in their training business to hire you in, right? Because it may very well be that you say, I'm not making a deal with respect to this. It's how we mutually do this back and forth. And what's good for the goose is good for the gander. And it's all sort of set up, in which case they may say, I think I'd rather have more money and then pay more money. Or they might say, listen, I'd rather have a little less money, but whenever I bring her in, I'm going to make much better margins, right? So that's part of it as well.
Maybe we could change directions a little bit and talk about the connection between pricing strategy and marketing strategy. So like
Mm,
properly understand pricing strategy, you also have to understand marketing strategy, um, and like your industry. So like a classic example, and most professional services are not selling product, but like, 1 for 5 or buy 1 for 10 and get the second one free, these kinds of pricing. So do you have any insights for professional services in this regard?
I think let's just say that you're new to a particular market. You're entering a new geography. You're serving a sector for the first time, right? You might decide to say it's more important that we sort of get in and get a referenceable client in this new geography or new service line or new fill in the blank, etc. And as a result of that, we're willing to reduce some of our margin, right? Just to make sure that we get that job, right? Sometimes you may say, this is a tester engagement for a client, and so we're going to reduce the price of what we do for that because we're hoping that we're going to get more work from that particular client. Let's say you're doing a tester engagement. It could be a blueprint for a strategy. It can be the first thing of what might be many. And and the client dangles something. This is good. We'll probably be working with you in the future. So let's just say the engagement's $15,000. What if you said, well, no, let's say $20,000. What if you said this? It's $20,000. But if you use us within 6 months for another engagement that's bigger than this, we'll give you a credit for 50% of what you paid for that first engagement. We'll give you $10,000 off that bigger second engagement, that longer term retainer, whatever it happens to be. If you say, here's the $15,000 engagement, and if you give us, something later, we'll give you $1,000 off. This is kind of like not good, right? It positions you almost as here's your coupon, if you will. On the other hand, if it's something substantial enough where you've reduced the risk to them, and if they do truly want to use you, they'll get a substantial discount on whatever that next thing is, right? But only if they make the commitment now. And if they don't decide to use it, you got a better margin, right? So I think that's something that I think is pretty good. The 2 for 1 and everything. Sometimes if you're selling training, you could always say, listen, why don't you is there somebody else from another division that you think might find this of use? Please bring them in. They could learn something new, and they'll also have a chance to bring that knowledge and us hopefully to that other division. With respect to pricing on marketing, it sends the signal, right? But without that discovery, without understanding kind of the nature of the problems, it's very hard to say, okay, that signal is too high or too low, right? And so the more you get to know a client, I mean, one of the things that we'll do is we'll do an Ask Me Anything session where we'll give like an hour of time where we ask the toughest questions the client has on offer, and they'll get real value. And at the very end of it, it's very simple. I'm just curious, did we move the needle significantly for you, right? And the answer, usually is yes. But here's the thing, right? Without that understanding of what's going on, it becomes hard to say how pricing can be used as a lever. But I think that when you do have it, you have a much better sense. The other thing I should say is this, Rania. How often, how good, or how appropriate is it to say, what's your budget? Sometimes the hardest question to ask, isn't it? Right? If we have a better sense of what their budget is, then we can say, well, gee, I don't know if we can help you. Or we can say, tell me how you got to that number. I'm curious, right? Or do you have a sense as to whether that budget, it sounds like it's a $1 million problem in that $2,000 budget. Is it a bit out of whack, or am I missing something here, right? And so if we think about the marketing that you do and the conversations that you have and the price choices that you make, right? I think they are highly integrated. So.
Randall, I don't know who you are anymore. We talk to our clients about competing on expertise and trust and value, but we're talking here about discounts and coupon codes and,
Oh.
I think it's worth exploring all of this to get clear in our minds about pricing strategy. But when we think about buying psychology, it is absolutely universal that people love to overpay for stuff. I mean, the whole existence of luxury brands, luxury cars, luxury perfume proves this, right? So when we think about the perceived value of an item on low cost versus high cost items, how can we more effectively communicate the high end appeal of our own professional services?
Huh. Uh, a great question, and the nuance that I'll point out that Rania mentioned is about our professional services. So here's how we get on the game. Part of it is by using what I call the halo strategy, right? And this also deals with the question of, gee, do they really have the expertise here, or are they really a thought leader, etc.? We can say, and way back, I put the Toronto Star newspaper online. And interestingly, every time that we sold something afterwards, we would say this, and we'd ask the client, "Well, why did you buy it from them?" It's, well, if you could do it there, you could definitely do it here, right? And there's this view of, wow, we've got the people that helped such and such with our stuff, and that's an angle of the luxury kind of good. Part of it also is the experience, you know. Is the experience one that's of a luxury? Like, let's face it, if you go to a Holiday Inn compared to the Four Seasons, it's a different experience when you check in, right? So what's the experience, the service quality that they experience during the buying process? Are they getting the Holiday Inn experience, or are they getting the Four Seasons hotel experience? So that's another angle. The third point is this: the decision maker is not always one person. For B2B, business development, sales, professional services, oftentimes there's multiple buyers. There might be a particular decision maker, but there's a whole bunch of people that influence. Sometimes there's multiple decision makers in different groups, a CFO as well as an operating leader. Sometimes it's a CEO and a board. But because there's several different things where decision makers, we're not always serving as the premium offering that therefore you should pay more for, sometimes doesn't serve us when these additional decision makers might not be in the room to experience that. They might just have a proposal. So in that particular case, what you can do is you can sort of push the idea that because of the experience that you have, the risk is significantly lower. So you're not pushing premium luxury. You're saying the outcome of the process and the service quality is premium, but really at the same time, it's far lower risk, less engagement risk, less risk of it going south, less risk of the intervention not being effective, etc. If you've done it here, it's successful, you could do it here successfully, right? And so that is, I think, part of that luxury premium kind of thing. I'll also say that there's some businesses that truly do, compete on price. Okay, it's very, very hard to be sustainable, because how can you invest in people and keeping your business and all that kind of thing? So for those that are purely based on price, you have to make sure that the infrastructure that you have demonstrates the fact that you are truly the low-cost provider, right? And as a result of that, you're going to get something for a far lower price than everybody else. And by the way, the risk is higher. Okay. And by the way, your expectations in terms of service quality and everything have got to be adjusted as well. But if cost is the only thing, I think part of the equation also is to, when you give those options with respect to what a client can do, option A, B, and C, is not just to say there's different prices, but there's different risk levels at each of those three options, right? Option 3, because it has more handholding, there's more time or more whatever it happens to be, reduces the risk. If you, from a cost risk perspective, if you really insist on time and materials, truly that is your risk, client. If you want us to bear the risk, we can give you a fixed price quote, but that's us bearing the risk, right? So having those conversations, so what you actually are proposing are things that give the client both comfort that they're dealing with call it the luxury premium, okay, but that they're going to get what they need.
I want to go further. I want to talk
Okay.
about Goldilocks syndrome when it comes to pricing, right? So I'll explain what it means. As buyers, humans are contextual buyers. What does that mean? We don't know how to evaluate anything, including price, unless we have comparables. So why is it called Goldilocks syndrome? Because how did she know one was too hot, too cold, and just right? Because she had what to compare with. So when it's very commonplace, when you get a quote from a contractor, from anybody, you don't know if it's a good or bad price. You go looking for option 2 and 3 to compare.
Yes.
So given that this is how the human mind contextualizes price, why don't we see as absolute standard in proposals 3 different pricing options so that they see our 3 prices in front of them and don't go looking in other people's proposal yards?
Oh, there's so much to unpack there. So number one, you make the case for sure, Rania, on the idea of making sure that there's a bunch of different options, and that there's option A, B, C, and within A, B, C you could choose this, whatever. So you can make your own price, okay, based on kind of what you think you need, because even during a great discovery, that's just a little 1 or 2 points in time, or 3 or 4 points in time, but you can possibly know as the vendor what's actually going on with inside the client. So you're absolutely right. That's part of it. With respect to the comparisons with others, pretty much every client that I've ever touched, wants to compare against others, and then they'll get some other bids. Most of them do anyway. And interestingly, this causes yet another problem. You see this in government procurement, particularly, but also large corporate procurements as well. So let me lay it out. Oh, we need to make sure that we get honest proposals, that everyone's going to sharpen their pencils. So we're going to do an open call for proposals for fill in the blank service, right? So then, a dozen service providers respond with a proposal. So my question is, if there's a dozen that are responding, how about the ones that aren't responding, right? The ones that aren't responded, I can tell you exactly what's going on. They're already very busy solving those problems, right? They're busy, right? They look at it and say, going through this very convoluted procurement process where it's not likely we're going to win because we have a mathematical 1 in 12 chance of doing so, it's not worth it. So either we're too busy or it's not worth it. So the people that do actually respond to those very, very weighty RFPs are ones that either they've got people dedicated to responding to RFPs, which means the price of that has got to be built in. There's a bigger fudge factor because the cost of doing it is bigger. And secondly, because they're only going to win mathematically 1 out of 12, the better one's obviously going to win more. Excuse me. They got to make sure that the price reflects the fact that 11 out of 12 they're going to lose. So the prices end up being a far, far higher, right? The competition is ruthless, okay, with respect to reducing the costs, no matter what. And the best ones, vendors are not even involved. They're giving it a pass, right? And I've had many, many conversations with procurement departments and the end user, the leader who needs to go through the process. And they call me up and they say, "Why aren't you bidding?" I said, we're busy, but B, the hoops that are required to go through here are just absolutely massive. So it's a challenge. It's a real challenge. And then there's the issue of, boy, I think it's the fix is in for somebody else. They're just going through the actual process, etc. So there's an integrity process that's challenging too, which means that the best vendors once again say, "I think we'll take a pass." Right. So I think the whole comparison thing, I think a lot better way to do it is to have a number of conversations with people that, vendors that you think might actually do a good job. And once you've got 2 or 3 of them, or maybe 4, say we're only inviting 3 folks to actually bid on such and such. Okay. Can you now put in a proposal about how you would do so? And what's interesting is when you do this in an open-ended kind of way, if somebody says, to do a retreat, well, if somebody whose business is not that might not know exactly what's needed in it, right? But if you specify in the RFP, the request for proposal, here's the 30 things that you've got to check off. Everybody who doesn't know about whatever the thing is going to say tick, 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 tick. And as a result of it, it'd be very hard to compare those dozen folks, et cetera, as opposed to the more open-ended RFP, where if somebody really knows their stuff, they'll know what to put in there, right? So it's a really big question, Rania. And I think I hadn't heard the term Goldilocks syndrome, and the psychology of decision, but the context issue is important, as is frankly some of the mechanical requirements with respect to RFPs.
We've talked in a previous Q&A session about, you know, the longer buying cycles we are seeing now, particularly here in Canada. So, which makes it challenging to tease out where like the real issues are. Like, how would you tease that out of like a longer buying cycle, whether your rates are too high or too low, or other factors?
So I think the question about the super long buying cycles recognizes if there is a problem that needs to be solved. Okay, sometimes it's planned for. Gee, we've got our objectives this year to do such and such, but we don't have the knowledge to do internally. So let's get some help outside, right? However that actually turns out to be. In which case there'll be some process where they look around for somebody who can help, and there may be an RFP, there may not be an RFP, etc. But there's a they wanted to do it, but it's Q3 and it's Q1, and it'll take a period of time. There's other cases where you've got a particular service and you're knocking on a door, right? Maybe it's from a referral, maybe it's somebody you've got a relationship with, maybe it's somebody just cold that you've got a connection with on LinkedIn. So in those particular cases, I don't think you're selling anything. What you're really doing is you're exploring, what are the issues that are actually on your plate, right? Where's the priorities, right? Nobody will buy anything unless it's kind of near the top of their priorities. And so part of what you might want to do is to say, well, how might we use, for example, some various marketing initiatives to actually surface that out, audits or self-assessments, or that kind of thing. How it might use like the kind of thing we're doing today, where we're having a conversation on a particular topic and somebody says, gee, I need more of that, right? And because they do a Google search or they show up live or listening on the podcast recording, etc., right? And so the idea is to say, how do we make something from, call it a marketing qualified lead, into a sales qualified lead, somebody who's now on the path to say, okay, I'm going to buy, right? Or I'm considering buying. Right. And it's a lot harder when there isn't budget. It's a lot harder when you've got to educate them as to what the problem is, or the size of the problem. So the way that many organizations do is say, we don't want to make that investment. Let's just go directly to the places where people who've got that problem tend to be. And that's absolutely fine too. Okay, shorter sales cycle, but more competition, right? So multiple answers to that question.
Have you ever worked with a pricing strategy consultant? Right? So, and would you recommend that somebody running their own firm go through that process? So for me, for instance, years ago, I was through a very detailed SEO process, and it has served me well for many years to have gone through that process. Like, what would you say?
I'd say that if you figured it all out yourself, then and it's working for you, don't change. Okay, just do it. But the problem is that if you truly believe that, then you're blocking yourself out of any new ideas that might have come your way that you're missing. And you may sort of find yourself in a place where if only you had known something earlier, or somebody had said aha to you earlier. I can't tell you the number of times I've reviewed an organization's proposals, and I'm shocked that it was like something from like 20 years ago, and they thought that was the best practice. And the answer was, yeah, it absolutely is back then. But there's an awful lot of new stuff today that perhaps you might want to actually incorporate, right? And not just on the pricing, but on the entire proposal. I think the same thing goes with pricing. Now, there are some people that work very, very, very narrowly. pricing for government RFPs, responses, for example, pricing for, hardware and services of technology, very, very, very narrow and everything. And if that's what you need, I'd say, yeah, absolutely go for it. On the other hand, I think that having some good, conversations with well, people like us, okay, could probably get you a fair amount of the way there, particularly from a coaching perspective or call it a review perspective. And at least that way, that you're generally on the right track and you might have, pick up a few things, much like you might in this particular podcast episode.
Looking back on the questions that were asked this hour, for me, one topic stands out as absent and as a real elephant in the room. When you go around and talk with your peers and your friends and your colleagues, everyone's talking about inflation and the cost of apples at the grocery store. How come nobody here asked about that? So if we know that it is perfectly reasonable to price your rates to include your costs and costs of living, you can set those rates, but unfortunately everyone around the table has, less money in their pockets. You raise your rates, they can't pay. Do you want to speak to this?
Yeah, I think it's, what we're paying for hosting now for our websites is very different than what we paid, a year and a half, 2 years ago. What we're paying for just about everything is significantly increased. So, when we talk about price and we talked about, budget, competitive offering, and cost of service, really the question of making sure you understand what that cost of service actually is so that you can incorporate it. For contracts that go over a period of time, okay, having built-in inflation increases or some other mechanisms so that at least that way you're maintaining some degree of parity. I think one of the bigger challenges happens to be when you feel that you don't want to rock the boat with a prospective client. Gee, prices have gone up. It was 3,000 a month, and really the new price is 3,500 a month. And boy, that sounds like a big increase. And boy, what if the client says, "Well, I think we're just going to stop now," and so on. So I don't know any entrepreneurial leader who doesn't think, well, what's the price sensitivity of a particular client, and gee, do I really need to do it now, or what if it opens up bigger questions, etc. This is what I would suggest. When you've made the decision that, gee, you're going to raise the rates, what you can do is once you've made the decision to actually raise your rates, it becomes a lot easier to say, okay, decision made, how? Okay, and when? So having a conversation with the client saying, listen, we haven't raised our rates in the last 2 years. Our costs have gone up quite a bit. You're grandfathered until the next fiscal year at the current rates, but at that point, we need to increase them. Is that okay? Do you have any concerns? And having that kind of conversation and giving them some lead time so that it doesn't suddenly impact their budget in a difficult way, or that there's some degree of rationalization as to why it might be necessary. They're still getting the quote same value, but they're paying 10% or 15% more. Well, the cost of providing this is actually gone up for a whole bunch of reasons. So I think that's part of it. The other part of it is to particularly if you've got clients that you're billing in other currencies, and maybe the currency exchange rates have changed a little bit, and you've got to do an adjustment for that kind of reason, is to be able to say, okay, well, gee, I've got to make a change for the following reason, and have the conversation. So if you don't have the conversation, I mean, shame on you. If you do have the conversation, that's great. I do have another example, as a paid professional speaker. I remember much earlier, very early in my career, my rate was like $3,500 for a keynote, $3,500, and I got up there for an hour, an hour and a quarter, and did my thing. Now, of course, the reality is that there's like dozens and dozens and dozens of hours of interviews and research and customization and preparation and writing articles and all that kind of stuff. But it was getting busier, and no surprise, it was such a low rate, okay, for somebody at my level, and so I increased it. I decided I'm going to increase it now to 5,000, and it was very hard to get those words 5,000 out of my mouth because it just seemed like a usurious amount. Okay, of course, now my rates are much higher. I'm in the Hall of Fame as a speaker, so but still, it was very, very hard. So what I ended up doing is I ended up doing two things. I had a full Post-it note that I put on my computer that said 5,000. And on my whiteboard, just on the side there, I had this word big 5,000. And when somebody said, well, how much would it cost to have you speak at our conference, the opening keynote? I looked over to the side and I looked at my Post-it note and I said, 5,000. Right? And it was very, very, very hard to utter those rates. When you change your rates, the first person you have to convince that it's true is yourself and your colleagues, right? If you're not able to say, yes, this is the reason why you're adding value at a certain level, it becomes a lot harder for a client to say, yeah, okay, I get it, right? And so that's how I would answer that question, Rania. It's a good one.
When we look at how much work actually goes into running a firm and managing the clients and perhaps those difficult clients and the back and forth and all the extra meetings and all the extra add-ons that are small but all add up and take our time and take our mind space. Do you think professional service professionals really get what their hourly rate actually is?
Huh. The answer is the hourly rate. I wish I could keep my hourly rate. Okay. I wish I could. Okay. But running a
How big a
business,
gap do you think there is? Like, do you think people are doing the math?
I think I think you've got to do the math. Of course you do. Okay. I think the challenge is communicating that sometimes with clients who aren't sophisticated buyers of services. Okay. It's not likely a mystery to many people here, but how much of your time is spent on banking, with the bookkeeper, with the accountant, with the all of the other the technology. There's so much stuff that goes in to the overhead component, okay, let alone the delivery, the variable cost component of actually delivering. And um, that all takes money, which has got to come from the clients who are getting the benefit of that particular expertise or that particular training or coaching or whatever it happens to be, right? And so it's so tempting to say, boy, I wish I had that job. I'm making $100 an hour, $200 an hour, whatever the number is. $500 an hour. No, that goes to keeping the lights on, right? And so how do you convey the value? It's not in terms of an introspective, this kind of thing. That's talking about what's the cost of delivering the service. It's really the question of making it more of a what's the uh, what's the problem that you're hoping to solve? What's the movement you're trying to get? What is the change that your intervention, however it is, as an advisor, what needle is it going to move and how much, right? And if it turns out your cost of delivery is too much for the benefits earned or opportunities missed or risk mitigated, then you're not going to be doing work for them, and they don't want you, and you don't want them, right? On the other hand, when the pricing is good, and it helps keep the lights on in the organization, and it pays for the time and the effort and the expertise and everything, it becomes something that's beautiful because everybody wins.
You get the last word. Where should we encourage our audience and our clients to put their focus when it comes to pricing strategy?
I think the focus has got to be making sure that this is connected both to marketing on one side and delivery on the other, right? Pricing is one part of the equation. And if it becomes the only part of the equation, unless you deal with how do you build expertise into thought leadership or trust into trusted advisor, right? If you're focused only on price/cost, right? What's the signaling that it actually gives to the actual buyer, right? If you're bidding on things where it's a race to the bottom, okay, and the likelihood of you winning it is so minute, okay, could your time be better spent doing any other kind of business development or marketing activity, or frankly, just serving your existing clients, just giving them that extra little bit of extra. So I think that pricing is something that we don't spend as much time on, And likewise, from the buyer's perspective, I think the profession of procurement sometimes does us a disservice because it focuses very much in the unsophisticated cases, focus only on price, and it doesn't explore, for example, the cost of inaction or the cost of making the wrong decision in terms of who you actually hire. So I think that pricing is critically important. We've talked about an awful lot of different aspects of it. It certainly comes up, certainly when we're coaching clients or when we're with senior leaders, because everyone's concerned about, do we have it right? And same thing with the vendors when we've started with the buyers when we've advised them, right? To make sure that you've got your RFP process is one that encourages the right kind of responses, not just any kind of responses.
Thank you, Randall, for the conversation, and thank you to everyone who joined us here today. If any of the issues we talked about resonate with you, if you are considering a change and want our perspective, please do reach out. We'd be happy to learn more about your organization and share some resources. We'd love to include you on the invites for our upcoming monthly live Q&A sessions like these. Please email us at info@randallcraig.com and follow us on LinkedIn. We'll look forward to staying in touch.